There's plenty of energy, there's plenty of oil, there's too much natural gas. We can't even give it away in the US in some locations. And all of that is healthy for the global economy. I think this is a big part of the reason why the US has not slipped into a recession, which is something we predicted almost a year ago now. There's plenty of energy, plenty of oil, there's too much natural gas. We can't even give it away in the US in some locations. And all of that is healthy for the global economy. I think this is a big part of the reason why the US has not slipped into a recession, which is something we predicted almost a year ago now.
Hello, everyone, and welcome to another edition of CEO and Market Expert Interviews. I'm your host, Lucian. Some of you know me as Triangle Investor from social medias. Today, I'm joined by most famous green chicken in the world, the author of widely followed energy Substack, one and only Doomberg. It is great to have you in my show.
Oh, it's great to be here. Very much looking forward to it.
Thank you. We have a lot of things to cover today, but we should maybe start with your 10,000-foot view on the overall energy sector heading. What series of events should be in our focus? What trends are crucial to follow in the next period?
Yes, so I think the most important question you can ask yourself as an analyst is, are the markets well supplied or are they in short supply? And right now, pretty much around the world, the energy markets are very well supplied. There's an abundance of natural gas, especially in the US. There's plenty of oil, so much so that OPEC has been struggling to defend the $70 price level. I noticed with some interest that they recently decided to push back by yet another month their production cuts. In other words, maintain them for another month. And so oil is sort of artificially high. Natural gas is cheap and abundant. Coal is cheap and abundant. And so were it not for political tensions in the Middle East, which I'm sure we'll discuss, I think oil would be trading measurably lower than where it is today. We do think that this does not bode well for OPEC and the long-term viability of that cartel. And much, of course, depends on what happens in the US election. We're recording this the day before.
Yeah.
And depending on who wins or whether there is even a decisive outcome, that will have a meaningful impact on markets as well. So that's our view, our 10,000-foot look. There's plenty of energy, there's plenty of oil, there's too much natural gas. We can't even give it away in the US in some locations. And all of that is healthy for the global economy. I think this is a big part of the reason why the US has not slipped into a recession, which is something we predicted almost a year ago now. We caught a lot of heat at the time for making that prediction, but I think it has played out quite well. We've had a good run of predictions lately, actually, so I'm feeling pretty good.
Yeah, I've been following your work, and predictions really are, you really nailed some of them. I agree on that. I watched a few of your videos where you stated that energy crisis is coming. Can you clarify on that? What kind of crisis should we expect? Who will be affected the most, and how can average person, let's say on the street, prepare for it?
So we actually don't think we're heading for an energy crisis. One of the things that happens when you go on a podcast is you have no say on how the thumbnail is produced. And so you could see, Doomberg predicts $200 oil when in fact we were asked a narrow question of what would have to occur for $200 a barrel oil to manifest, and that became sort of the thumbnail. But we don't see a crisis on the horizon. We just went through one. We went through one in Europe, of course, which spread to the world. You would know better than anybody.
Yeah.
I think the only real potential for an energy crisis would involve a catastrophic escalation in the Middle East. And there's not much people can do to prepare for that. And so all things being equal, we think the energy markets are very well supplied, and there is no crisis on the horizon.
That's good to hear, actually. I would like to touch a little bit on gold as well. What's your take actually on the gold and gold BRICS correlation? How would new BRICS currency affect the US dollar? And is BRICS new gold-backed currency imminent?
We wrote about this a few times the past couple of months. So on gold, we own a lot of gold. I don't own as much gold now as I did before the BRICS summit. I thought the BRICS summit was a bit of a disappointment, to be honest with you. And I think We're a long way from a BRICS currency that is backed by gold. These things just take much longer than the social media hype cycle would have you believe. This is the second BRICS meeting in a row that has underwhelmed. I think South Africa had similar hype heading into it. Gold is at an all-time high. We don't view gold as an investment. We view gold as a savings medium. We like to earn in fiat, of course, because we exist in the fiat world. We save by buying real assets, and gold is one of those. And then we invest privately where we can impact the outcome. That is our personal financial strategy. And we owned a lot of gold, and gold had appreciated to the point where it had become a bit too large of a component of our savings assets. And so I took a little bit off, still quite long gold. And again, we don't invest in gold. We view it as a savings vehicle. You know, our view is that 20 gold eagles will buy you a nice SUV today, and in 20 years, it'll still buy you a nice SUV. Whereas what happens to the US dollar or the euro is a different issue altogether. And so I think gold has had an incredible run. I don't think, commodities that spike like this, grind higher day after day, they tend not to continue to do that indefinitely. So we would be cautious, gold, but not so cautious that we're selling all of what we own. And again, to the question about the BRICS currency, I just think, as we predicted, there's a few actors in the room that might have different intentions, and not much came out of that conference, in our view.
Yeah, I tend to agree with you on BRICS, definitely. About gold, one other question. What event impacted the all-time high in gold? If you can emphasize one or two. I know that it's a variety of factors, the wars, the politics, etc. But what would you say was the crucial event that created the all-time high pricing?
I would say it was the sanctioning of the Russian reserves. The US and European debt, instruments had previously been sort of neutral reserve assets. Central banks around the world accumulated them with their excesses from trade, and it was assumed that these instruments were money good. And when the West first froze and now seems to be trying to at least partially seize Russia's foreign reserves, this caused many countries to reconsider whether treasuries and European debt are in fact neutral. And of course, they're not neutral. They were, rightly or wrongly, whatever your view on the war, the neutrality of these debt instruments was no longer apparent to the market. Whereas gold is itself a neutral reserve asset. It has no credit risk, and it used to be that gold played the role of U.S. treasuries, in that countries with excess reserves would park them in gold. To the extent that gold will reascend to its place as a neutral reserve asset for the settling of imbalances in international trade, then the price must go higher. And central bankers have been accumulating gold since the war in Ukraine started. And if you asked us to pin it on one thing, it would be the sanctioning of Russia's reserve assets.
Yeah, I often ask my guests, market experts, the same question, and that is, how should an average person on the street protect himself? Let's say if the bad times are really coming. I understand hard assets, gold, silver, but what else?
So gold, silver, land, anything that has value, regardless of the fiat currency regime that you happen to be living in. Of course, for some people, Bitcoin is a good option as well. We don't own any Bitcoin, but we certainly understand why people, especially in nations that are going through a crisis, would want to accumulate it. Mostly gold for us. It has worked for thousands of years and doesn't require much in the way of technology. It's very high value density. 1 ounce of gold is $2,700, of course. We also collect fine watches and a bit of artwork and things of that nature, things that are easy to store and tend to appreciate in value over time. In those markets, you have to have a bit of knowledge about what you're buying and the trends in the market and so on. But gold, you need no such knowledge. Silver is useful in small denominations as well, but its value is 1% of gold, roughly. And so you need to store 100 times more of it for the same value. And I think that actually matters. And so, yeah, but anybody who's gone through a crisis, if you were living in Argentina or any other country that has had hyperinflation like Venezuela, and if you had bought gold before the crisis, you're still a very wealthy person at the end of it if you owned enough gold. And that is the role historically that gold has played. It will always play that role. The demand for gold in the Middle East and in India and China, where people cherish, they understand that gold is wealth. A wealthy person has excess savings, and if you have excess gold, you have excess savings. And so that to the extent that you can afford it, now there are ways to participate in gold via the markets. Some people like to do that. Others are suspicious of the ETFs and whether they're truly backed by gold. When we do purchase gold in our brokerage accounts, we tend to use the Sprott Physical Gold Trust because it is the one that is most clearly backed by gold. In our view, GLD is a different instrument altogether, but we prefer Fizz and solid physical gold in our hand. Yeah.
Same here. What's your take on the financial markets going forward? Let's say 2025. Do you see a market meltdown or some correction, maybe 20, 30, 40%? What's your take?
Yeah, it's difficult for us to time markets. Since we don't participate in them, we don't have a feel for them. It's not something that we're skilled at. I think, of course, much depends on tomorrow. So many of these questions, we are really discussing a singularity on the other side of which is difficult to predict until you know what happens on November 5th. I think long-term, the U.S. fiscal situation is dangerous, but bullish for stocks because we are measuring stocks in the U.S. dollar. And we are printing $1 trillion of debt every 90 days, which seems unsustainable. Much of that debt is denominated in short-term paper, which is the stuff of emerging market debt crises. It's really amazing that this is what's happening in the United States, and we're all just sort of pretending like it's not going to matter. It has to matter eventually. But we're going to print, like they're not going to deny Social Security, and they're not going to default on the debt. And we're paying 1.2 trillion in interest now, which is a form of stimulus for rich people because that's who owns debt, and they get all that interest and they turn around and spend it in the economy. And so we are running an amazing experiment where the global reserve currency is hyperinflating its value away. If you just look at the value of gold, we measured in US dollars. Wow, the price of gold is up. Well, another way to say it is that the price of fiat currencies in the West are down because gold is really the hardest money. And so if you read back what happened during Weimar, which we have done and very fascinated by those experiences, you saw that stocks exploded higher. Speculation was rampant, and we see that today. And as we careen from bubble to bubble, behavior stocks, that are clearly not worth a fraction of what they're trading for, get bid up to crazy heights. Who knows when the party ends, if the party ends? But we think there's forces behind the rise in prices that explain it. I mean, we never think the market is wrong. The market is just always teaching you something. Huh?
Yeah, it's a school, definitely. Let's move more to energy and commodities. Probably the most hottest topic in energy sector in the last few months is nuclear and AI and data centers needs for nuclear. Is further development of AI even possible without nuclear? And how do you see that relation going forward?
We actually think that, well, first of all, it's unabashedly bullish for nuclear. All things being equal, nuclear technology is ideally suited to power the AI revolution, and aggressive moves are being made towards that end. However, we believe as a bridging fuel, the shocking abundance of natural gas in the US will have to be put to work in this regard. And we think what we're going to see are sort of self-contained pods, if you will, giant buildings where natural gas goes in and data comes out. Not connected to the grid. There's no worry about transmission lines or federal permitting because you're crossing states. So if you could geolocate your data center right in the Permian, where natural gas is free, or sometimes trades negative, it would make sense. Why chill natural gas and put it on a boat if you could intercept it at the source? So this is why we see Oracle, for example, investing $6 billion in Malaysia. Well, Malaysia is an energy superpower and a big exporter of natural gas. So they're just going to go and intercept that gas at the source, and where it's cheap and abundant, and use it to power the data centers directly. And there's so much natural gas in the world that in theory, you wouldn't even need nuclear. The only difference is it takes longer and it's more expensive to build nuclear today in the West, which is a political choice. But also, if you care about carbon emissions, then nuclear is superior in that regard as well. So, but we'll see natural gas being consumed in this way. Look, as the time of this recording, just checking my Bloomberg terminal, but natural gas is $2.67 a million BTU at the Henry Hub. That is the equivalent of $15 a barrel oil. And there's like so much of it that we don't know what to do with it. Well, what they're going to do with it is they're going to burn it to create electricity to run data centers. That's what's going to happen, and it will happen. And the fact that it'll be done off grid is a good thing because we don't want to destabilize the grid for everybody else.
Yeah, yeah. So if I understand correctly, you are bearish on natural gas, short, let's say mid-term, short-term.
Well, it's hard not to be bearish short term because there's just so much of it, but we're actually bullish medium term and long term. In fact, we think that the oil to gas ratio is going to continue to shrink. The natural state for that ratio is approximately 6. There's 6 times more energy in a barrel of oil than there is in a million BTUs of natural gas. It has traded for as high as 50 recently because of the glut of natural gas. It's come back down now to about 30, and we think that number will continue to go down because oil is managed too high by OPEC. It's higher than it would be naturally, and natural gas will get consumed. And so that glut of supply will get soaked up, which is bullish. The big challenge with natural gas today in the US, that ratio would be even lower were it not for the unusually warm winter that we seem to be having once again. There's just so much natural gas here in storage that if we have an average winter, that would be very bullish for natural gas. If we have a colder than average winter, then we could see that the price of natural gas go up much higher, much quicker. Trading natural gas is like trading silver. It's the devil's trade. It's very difficult to trade natural gas.
Yeah, yeah, totally. And the winters are really mild. Let's say I'm here in Croatia and it's November and we have more than 20 degrees right now. So it's totally wild. I want to touch a little bit. What do you see in the cards for CANDU? Are the tech giants with their AI appetites for electricity going to love CANDU? Seems like arranged marriage from heaven, tech and CANDU. What's your take?
Yeah, the CANDU reactor system is really one of the most attractive in the world. I don't know why the West just doesn't um, sort of center on or decide what a standard design should be and build a supply chain to fund it. CANDU is one option. Of course, the AP1000 is jockeying to be the US embodiment of the nuclear renaissance. So I think both parties in the US seem to be strongly for nuclear, although the environmental left of the Democratic Party is still opposed to it. And I think a Trump victory would be more bullish for nuclear than a Harris victory. And so, yeah, CANDUs are fantastic. I mean, Ontario runs basically their entire grid off it. Other countries have successfully implemented them. It's a very beautiful setup for a variety of reasons. No setup is perfect, of course, but we don't really care which. I mean, all designs are way more than good enough. There's never really been a technological constraint to the development of nuclear. So the underlying technology is almost irrelevant. What matters more is the politics and the regulatory regimes in play.
Yeah, what about SMRs? Do you believe that SMRs have a bright future? And actually, with it's unclear today with the datas of the SMRs that are building right now or are in planning. Some say numbers 400, 300. What's your take on SMRs and the numbers and the real numbers of SMRs in development?
Yeah, again, it's hard to separate noise from signal in this regard, and until we start seeing them turned on and running, and we get the experience that comes with doing that, it's difficult to say. Again, SMR is an example of a nice technology that is not really needed. Big nuclear reactors are just fine too. But there's some advantages to SMRs. And if one of them is you could do it more quickly, with more speed, with more regulatory certainty, with a few standardized designs, then we would be all for it. We shall see. Big tech knows how to do these types of projects, and one way to model the world is that we will do whatever we have to do to maintain ourselves on that Kurzweilian exponential growth of computing power curve that he famously wrote about in his book almost 20 years ago now, The Singularity is Near. And big tech will make that happen. If it does happen, it'll be because of Microsoft, Google, Facebook, Nvidia, and so on coming through in that way. And these companies know how to build large projects quickly. So and they also throw a lot of money at U.S. politicians, and so they will get their way.
They all need uranium. What's your take on uranium and the incoming supply-demand gap for uranium?
Yeah, uranium's interesting. They need refined uranium, which is different than just uranium.
Of course.
There's plenty of uranium in the world. In fact, all of our quote nuclear waste is just waiting to be recycled into fuel. We barely use any of the embodied energy in a uranium fuel rod today before we take it out. You just have to run it through a fast breeder reactor, and presto, you have 95% of the energy left in that rod to be harnessed by the future. So we like to say there's no such thing as nuclear waste. It's just a gift to future engineers. And so there's plenty of uranium. There's lots of supply that could be turned on. There will be choke points, especially in the purification and processing of that uranium. But as far as the commodity goes, the price of uranium is kind of irrelevant to the cost of running a nuclear power plant. So it could double or triple from here, and nobody would really notice. Whereas with natural gas, of course, it's a direct feed. So we were bullish on uranium when it was in the 30s. We thought when it surpassed 100 and touched 110 that was a bit of an Icarus print, and we were cautious. And I think it's consolidated now at a more reasonable price. But there's plenty of supply. When we need it, we'll know where to go get it.
Okay, how is the future for oil looking? Do you believe that oil will play a major role in the years to come, or the oil days are slowly coming to an end?
Now we think that's nonsense. The human endeavor is a constant, unrelenting struggle against the forces of entropy. You need energy to beat back those forces and to impose order, i.e., to create a standard of living. Any oil that is not consumed in Europe will be greedily consumed somewhere else. We have this phrase that we call Doomberg's postulate, which says that every molecule of fossil fuels produced will be burned by somebody somewhere, and restrictions against such activities merely relocate who gets to enjoy the privilege. And so there's 7 billion people in the global south, all of whom would be happy to drive gasoline-powered cars and to have all of the benefits that come with jet fuel and diesel. And so we think that we will continue to grow oil production. We will continue to grow coal production. We will continue to grow natural gas production. And the gating function of demand is production. The more if we overproduce and prices go down, guess what? People will consume it, supply demand. And then if there's a shortage of supply, there'll always be a response by the industry because they're technological superpowers. And so by 2030, I think we'll be burning way more oil than we burn today. And by 2040, we'll be burning more oil still. There's no shortage of it. The demand for it is infinite at reasonable prices. And a great majority of the world lives a standard of living that those of us who are privileged enough to live in the West would find unacceptable. And who are we to deny them as they try to ascend Maslow's hierarchy of needs? And so all the oil that is ever produced will be burned, and all the coal that is ever produced will be burned, and all the natural gas that is ever produced will be burned.
Yeah, you're probably right. But what do you think about the short term? What do you think? What are OPEC's next moves on the market?
All things being equal, we would be bearish oil, especially if Trump wins. By the way, if Trump wins, drill baby drill means lower oil prices, which is bad for the energy sector, really. even though 95% of oil industry executives in the US will probably vote for Trump. If Harris wins, we actually think that is bearish for supply and bullish for price, because the EPA will act as a restrictor to the industry in a way that imposes discipline on them that they seem incapable of imposing on themselves. They always drill when they can, regardless of price. And so, again, like, not to be a broken record, but I think much depends on the election.
No, it does, really. It really does. What about copper and copper price dynamics? What's on the table for them?
Copper's interesting in that it never really priced in the so-called green energy agenda, the green energy transition. If you look at the price of copper back 20 years, show me on that chart where we're going to need way more of the stuff than is currently planned to be mined. And so it's just not there. They never really believed the hype. And so I think the copper market has been telling us for a long time that the green energy transition is a mirage and will not occur. And to your earlier question about, are we going to stop burning oil because we have so many electric vehicles? The answer is no. We might burn it in different places, but copper is signaling the same thing in our view. And if prices get out of hand, I think new supply would be found. But there's nothing in the chart that gets us too excited about the future of green energy.
Yeah, the next commodity I would like to hear more from you is silver. You mentioned a few things, but I would like to hear more about your take on silver as it has two uses, industrial and monetary. What do you see in the cards for silver?
I think silver, to the detriment of silver bulls, is becoming more of an industrial metal and less of a monetary one. And this explains why the gold to silver ratio is exploding so high. The world has decided that of the precious metals, gold is basically the only money. And I have friends who are very much long silver, and I respect them, and they trade markets, and I understand the bullish thesis for them. But again, back to the green energy transition, if solar were truly going to dominate the world, then we would expect silver to be trading for far higher prices than it does today. And it simply doesn't. It's still in the 30s. Been down here for a very long time, and it has not rallied alongside gold since the sanctions. And so we don't own much in the way of silver, a few coins here and there in my safe, but nothing to be, get too excited about.
Yeah.
Yeah, and we own no SLV, for example, or any of the silver mining stocks. Not that we would, but it's just the factors that are determining the price of silver are all about supply-demand balances in the solar market, basically, today. And so it's just another indication to us that same thing that copper's telling us, same thing that lithium is telling us, nickel to a less extent. The sort of green energy revolution has passed its peak. I think we called COP28 as the top of ESG, and I think we're going to see a very different COP29 coming up here next month. And time will tell. But nothing too exciting for us. Look, silver could double from here. Right? Silver, like natural gas, is the devil's trade, as I said earlier. But we have no meaningful insight either way.
Okay. What about rare earth elements and rare earth as a commodities?
Yeah, the challenge with rare earths is not so much the mining of them, but the processing of the concentrates into the pure metals, which China has a literal monopoly on. So even if we started mining our own rare earths here, they would have to be shipped to China. And that's a dirty business, literally. It's an environmentally taxing business. And unless and until the West gets serious about reshoring critical supply chains and rolling up their sleeves and doing the heavy lifting around processing of metals in this way, China is going to have serious supply chain leverage over the US military, over Western militaries, over NATO, and they will use it.
Yeah. Doomberg, on what other commodities are you bullish? And are there some commodities that you are really bearish right now?
So the overarching trend in all commodities especially, well, energy commodities in particular, is down. Like the oil and gas companies are giant deflationary machines. Technology is always being developed. So we like to say buying commodities is like buying the VIX. It'll degrade on you and degrade on you, and then every once in a while there's a spike. And trying to time those spikes is very difficult. Much easier to fade them, by the way, because they're always followed by collapse in price. And so we wouldn't be particularly bullish any commodity or their producers, just because over time they drill themselves out of business. And so we would wait for spikes. And then I think the easiest trade in the world is to short, assume that the price of your favorite commodity that is mooning will be down at least 50% in the next 6 to 9 months, and position yourself accordingly, because that almost always happens that way.
Yeah. How can investors reach out to you?
Well, you can find all of our work at doomberg.com. That's the easiest way to reach out to us. Whenever we publish a piece, our comments are closed to paid subscribers only, which means I personally go in and reply to virtually every comment that is in there. So that's actually the best way to get more of our time, is by simply participating in the comment section. Any subscribers who send us an email or DM us on the Substack app gets a direct response from either me, the head writer, or the editor-in-chief. And so we're very responsive to our paid subscribers. That's sort of the best way to get our attention. We like to say you're even allowed to troll us if you're willing to pay to troll us. Then at least, at least the money is there. Yeah.
Yeah. That was Doomberg. Thank you for coming to my show. It was a great chat, and I look forward to host you more often, since this was your first appearance in my show. Thank you for coming.
Anytime. I appreciate it. I really enjoyed the conversation, and best of luck.